I always got to start off with a smile. Hello, hello, everybody. Let me adjust myself. Um, Happy Tuesday. Happy tantalizing. I love the word tantalizing Tuesday. Um, just coming to you live today. Yes, I got on my miracle shirt again because miracle. I believe in miracles. Shout out to Pastor Kelly, Pastor Tino, and Warrior Nation. And well, no, I don't want nobody to join it. I gotta try to figure out how to stream. I got all these pages. I gotta figure out how to stream. Hello, everybody. If you don't know me, my name is Toria Howard. I am a former educator, high school English, girls basketball coach, and now I'm a serial entrepreneur. All things real estate, commercial real estate, residential. I can help you in Memphis, Tennessee, and all across the United States. Also, if you don't know by now, I do credit restoration and financial literacy as well. So we're coming to the end of Financial Literacy Month, and I wanted to stress this a little bit more about financial literacy. Thank you guys for joining me. So I'm not going to be before you long, as I like to say, as the preachers like to say. Drop a one in the chat if you guys are watching this live. Drop a two in the chat if you are new to my live. Drop a three in the chat if you're watching the replay, and I really appreciate it. Please send me some comments. Tell me if there's some good information. Interact with me. I like to talk back. So first thing I'm going to go over is because I am a realtor, and I am Hello Tessa. Thank you for commenting. Quintella, thank you. Thank you for commenting. I appreciate it. So, things first, to talk about the market. Everybody is crazy about what's going on with the market. If you saw my live yesterday, I was talking about how the interest rates are changing daily. So, are you interested in purchasing a home? Please get yourself together as soon as possible because the interest rates are going to continue to rise. So, you want to make sure that you can get in the home that you want. So, talk about the Memphis market, Memphis, Tennessee market. So, it's still a big competition. Buyers are still out here trying to buy. So if you're thinking about, oh, I'm gonna wait for this, I'm gonna wait for that, you're missing out. It's always a good time to buy real estate because real estate is an asset that appreciates, and also you can use that to leverage and use it for other things to help build wealth. So, despite the mortgage rates, the competition is still high. So the median days on the market in Memphis, Tennessee is 17 days. And that's a long time. You have stuff that come on the market today, it's going to be off the market today. So, but the median is 17 days on market. It's the house in Memphis right now. So percentage of properties sold in the last in less than 1 month, 87% of properties have been sold in less than 1 month. So think about that number. Average number of offers received on the most recent closed sale was 4.8. So you're getting about 5 offers per house. But some houses got more than that. I had someone tell me, I was on a real estate call. They said that somebody purchased a home for $90,000 over asking. Let me let that breathe for a second. 90,000 over asking. That's insane. Like the highest I've heard was like 20 to 30,000. 90,000 over asking. It's insane. It's crazy. So percentage of first time home buyers at 30%. We need to get this percent, that part we need to get up. First time home buyers, that percentage should be half because everybody should be in the way of, yeah, it is ridiculous. Everybody should be on their way to home ownership. That is how you build wealth. Part of your portfolio is owning real estate. If you are thinking about, becoming wealthy. If you're not and you just want to have a home still, being a homeowner is so liberating. Like I know it's a lot of upkeep and it's this and that, but you get tax advantages. You can use the money from your equity to invest in other things. There's so many other things that you can do, and it's yours. And then you don't have to wait 30 years to pay it off. But that's another conversation for another day. So we need to get that percentage up. We need to get that percentage to 50%, 60%. We need more home buyers, first time home buyers in the market. It's so much money out here for y'all to get. That's the thing. Tennessee just dumped more money for these lenders to give you guys. You got lenders that got 0% down. You have lenders that's giving grants for down payment costs and uh, closing costs and you know, appraisals and different things. You have lenders that's giving you money back at the closing table. But y'all, people are not tapping in because they don't want to do the first thing first, which is get their financials together, which won't take long if you get started. So, do you understand that in the Black community, that only like 43% of us are homeowners? And it's getting less and less and less. It's going backwards. It used to be like 65, like 70% were homeowners. Everybody that sold grandmother's house. Everybody that sold grandma's house. So nobody don't have grandma's house. Somebody else got grandma's house making money off of it, and you could have did that too. I've had so many friends tell me that, oh, we got family land, we got family land, we got family land, this family. And the family can't even come together to do something. So they sell it to somebody else that's gonna make money off of the sweat of your ancestors. We have a 100-acre farm in Virginia. And I'm so glad that my grandparents put in a provision that it can never be sold. Do you under you people don't even realize that you can put a provision in on your deed for your home to never be sold. If you know you got some grimy family members that you might and you buy your home and you don't want it to be sold to nobody and it has to go to somebody in the family, then you can put that provision in there. If Well, it all depends, Latessa. You have some lenders that are still offer you, but it's still incentives and programs out there. So don't fret about that. You just have to talk to the right lender, get with the right program, and you know, you'll be able to do what you need to do. Yeah, send me a DM. We do too. I said we do too. I don't know how to say it, but send me a DM. Yeah, we could definitely talk. Um, So we need to get the first time home buyer um, percentage up. We need to get the Black community home ownership back up. Um, why I got a poor connection? Let me turn my Wi-Fi on. I hope it's fine now. Oh no, connect me back. Okay, there we go. But anyway, so no cash first time home buyers who put down less than 20% down, 69%. This is in Memphis. So 69%, 69% of no cash first time home buyers who put down less than 20%. You do not have to put 20% down on a home. And then if you have a 401k or some type of a living benefit life insurance policy, those of you that don't want to mess with the life insurance, you can borrow from your 401k and from your life insurance to help you purchase your home if you cannot qualify for a first time home buyer. It's ways around to get the money. You just have to utilize it, and then you won't have to pay a penalty with your 401k, because they have provisions in place that will help you be able to borrow from it to be able to purchase a home. So it's no excuses. So you can win in this market. You just have to pick the right realtor, and you have to pick the right, be disciplined in the situation. You can still win in this market. I know, people are so downtrodden about the market, and it's not as bad as it seems. It's always good it's always a good time to buy real estate. It's always a good time to buy real estate. There's never not a good time because real estate is going to continue to appreciate. It's an asset that grows. It's going to continue to grow. It's going to continue to, you know, pay dividends if you pay your bills and do right about it. So those of you that don't want to start in the smaller home because you want the big grandiose house and it's not good enough for you, guess what? You're gonna still be stuck in the same place that you are because you don't want to get started with something that you can afford right now. That starter home is the home that can help you get the larger home. You take that starter home, you You stay in it for 2, 3 years, build up the equity, use the equity in that home, purchase a bigger home because you have a bigger down payment at this point. Use that home as a rental and make residual income, passive income off of it every month. And that's paying that back. That's paying that mortgage back. So you got to learn how to leverage and be smart about your finances. And that's just what it is. If you're not going to be smart about your finances and learn how to leverage it, you're going to be left behind. It's just point blank in the period. Cash does, if you got cash, more power to you. But if you do not, you need to leverage your credit to get what you need. You can use your credit to turn it into cash so you can buy things. People buy homes with credit cards. Did y'all know that? Did anybody know? That you can buy you can buy a house with a credit card. You can do that. So you have to understand the factors in what you're doing with this money. It's so much money out here. It's so many things that you can do. Yeah, cash and credit. It's so many things that you can do to leverage money out here. It's too much money for us out here to get. Like I said, in Tennessee, they have gave lenders more incentive programs to be able to help more home buyers become homeowners. And I'm pretty sure that's across the nation because they need more business. The lenders need business. The government needs more people to pay taxes so they can fund the things they need to fund in the government. So of course they pumping more money into that because they need more homeowners to pay taxes. They need less renters, more homeowners. It's a win-win situation. So you have to understand that leveraging your credit is one of the best things to do. You have to understand how to do it though. So you get with a lender, get with a good realtor in your area and figure out what you can do because it's lenders and there's realtors out there that really care about you. You just have to be transparent. You just have to be able to willing and disciplined to do the work. Nobody don't want to do the work. That's part of the problem. Nobody want to wait through the process. It's a whole process. Now, you're going to have to figure out how to vet the people that you want to work with. But I'm telling you, there are lenders and realtors out there looking to help more people become homeowners. But you have to be willing to do the work yourself as well. It's not just on us, it's not just on the lenders, it's on you as well. So, how disciplined are you going to be in the process to purchase a home? So, this is another thing. After you have made up in your mind that your credit has to be fixed, your financials get fixed, then you can go to a trusted realtor and a lender, get pre-approved. But during the process, you still have to be disciplined. So my credit tip for today: factors that can hurt your credit score before, during the mortgage loan process. Everybody thinks once they get that pre-approval, it's done. It is not. You still have to be disciplined in your finances, people. You cannot do certain things while you're in this process because I'll tell you a story about me. When I first was purchasing my home, I had everything done. They check your credit multiple times during the process because sometimes it might take you longer to get that pre-approval going to expire. So you have to keep doing it if you don't find a home within the time frame of that pre-approval. So they check your credit score multiple times. It's a soft pull because it's coming from the same company, unless you switch lenders. And what happened with me was I was good. I was at the closing table. And I almost lost my home at the closing table because when they ran my credit at the closing table, when I was at the closing office, yeah, Chase Bank came back and put something back on my credit, even though it said zero balance and showed up as a collection. I almost lost my home because of that. And I had to get on the phone and call. I was in there about to cry. I was on the phone with them. They had to verify, they had to fax over, that was, telling, how old this was and still like emailing stuff and scanning and stuff on that. But they had to fax over the paperwork saying that they made a mistake. They almost took my house away at the closing table. So it can happen. Just because you get that pre-approval does not mean it's over. You have to stay disciplined in the process. So, um, so before you know, contact a trusted credit repair company to help you with delinquent items. So if you have delinquent items on your credit, you can contact someone that does credit. It doesn't have to be me. Find somebody that you trust, or whatever system that works for you. All systems don't work for everybody. So, but get those items deleted, because some things can't come back. Now, those of you that are using these other methods from these other people, and they're getting them off real quick, and they come back, I don't know what to tell you, but just understand that you have to make sure you keep the delinquents off. Any delinquents will make you lose your home and lose your pre-approval, and you're going to be crying. One of my lenders, my lending partners that I always work with, she had a lady get her keys at the closing table, drove away from the closing office. They called her back to get the keys back and said she don't qualify no more. Can you imagine that? That's sickening. That's disheartening. So you got to be disciplined during the process. So keep credit card balances to 7% to 10% utilization 2 to 3 months prior to applying for a mortgage. So they only want 2 to 3 months of your, what they're going to look at your credit statement. So just make sure that you can keep it. You got to start being disciplined before you even go to the lender. So 2 to 3 months prior, keep that credit card utilization 7 to 10%. You know, if you want to do zero balance, it's up to you. Some people are like, I want to zero it out, but as long as you spending on it, you still got to spend the credit. You can't just hold it. Avoid closing accounts or opening new lines of credit unless told by a lender or credit repair specialist. So don't lose on account history. Like, don't close them old credit cards. Don't do all those. No, just keep whatever it is that you're doing. But make sure you keep your finance, your revolving credit tight. Avoid excessive inquiries in 1 year time span. So it's best only to have two, but it's just to have none. Don't don't go out getting extra credit for anything. Buy your furniture when you get your keys and you moved in and nobody can come take them. Don't buy nothing on credit during this process. Do not add any more debt to your, because that debt to income ratio can come back and your pre-approval will change. You don't want that to happen either. So be mindful of what you're doing. Buy the furniture later. Get the refrigerator later. Get your home, then go back and get that stuff. Unless you got the cash to pay for it, that's fine. Do not add any more things to your credit profile that can take your debt to income ratio up. You want your debt to income ratio to be down so that you can earn, you can afford more house. Okay, so avoid co-signing for any new debt. That's I'm gonna drop the mic on that. I don't know how many times or how many stories I've heard of people going to co-sign for people during the loan process. Why would you do that? You putting your life in danger. Like, that's a life and death situation. Do not co-sign. Well, my dad said don't co-sign for nobody. That's just his policy. But if somebody come to you like, hey, I can't get this car, I need you to co-sign. You can't do it until you close on your house in 30, well, however long it's going to be. You have to tell people no. Learn how. Sometimes, it's hard to say no to our loved ones. It really is, because people be needing our help. But in the buying process, you can't put your name on nobody's thing, nothing. Don't put your name on nothing new for yourself. So you just got to be mindful that it seems like every time you in this type of process, somebody is going to come to try to ask you to do something for you. You got to say no. I'm sorry. They're going to have to find somebody else. Do not add any new debt to your credit profile. It doesn't matter what your pre-approval says. He says it's not hard to say no. Some people it is. Um, some people will make it so hard for you to say no though, Matella, because they'll make their situation, your emergency, and some people just feel bad and want to help. But during this buying process, you're gonna have to say no because you can lose your pre-approval can change. I had a client that had, I mean, she didn't buy anything, but she got in a bad car accident and couldn't work for 2 months. What she could afford because her income, because she didn't work for those 2 months, her pre-approval went from 250 to 230, and that hurt her. That was out of her control, but I'm just telling you how it can affect you because, like I said, they check your income and your debt to income, all that stuff throughout the process. If you are in a pre-approval stage and within it, however the time length it is, whatever it is that the lender gives you, and you don't find a home within that time frame, guess what? They got to go back and look at it again. They need new documentation. So you just have to be mindful in this process that you cannot do certain things. So if you got delinquents, contact a trusted credit repair company. Excuse me. You can, like I said, you don't have to use me, but you can use whoever process works best for you. Keep your credit card balances 7 to 10% utilization for 2 to 3 months prior to applying for your mortgage prior. So that means you have to get prepared before you even go to the lender. Avoid any closing accounts or open any new lines of credit. Don't get the furniture yet. Leave the furniture at the store until you get the keys to your home. I don't know why my connection keep going in and out. But don't add any new lines of credit. Do not close any accounts. Please, the inquiries. Leave them alone. Don't apply for nothing. No inquiries, no nothing. Because the inquiries can show. Now, the inquiries won't drop your credit score that much, but if it's a hard inquiry, it will, though. Let me say that. But it still looks bad because it looks like you are an overspender and you don't know how to manage your money. It doesn't matter that you have the credit or whatever the case may be. If the lender sees that you have it, you go keep on applying for credit. That means that eventually you're going to lose your home because you're going to be an overspender. That's what they're going to think. So let's not do that. So avoid co-signing for any new debt. I can't stress that anymore. Do not co-sign for nobody during this process. I mean, like my dad said, don't co-sign for nobody at all. But in the event you are in the home buying process, before and during, do not co-sign for anybody. If you feel like you got to co-sign for somebody, they will have to wait until you're done with your home buying process. So, anybody have any questions? You can put them in the chat. That's all I really wanted to talk about. Just give you guys a little market update. Don't be afraid to buy real estate right now. Those of you that equity in your home and you want to make some improvements on your home, you want to invest in your business or invest in other real estate, do it now because the lenders are really not wanting to. Because they don't get money for refinance. So if you got money, don't hold on to it. You're going to lose it. And the banks will take it. If you don't lose your equity and it's just sitting there, you'll get a letter stating that your home value has decreased. They're doing it because they're not making money off of you. So you need to use it. Don't sit on it. Just those of you that had that great credit score, you got that 800, that 750 and above and all of that, and you got them $20,000 and $30,000 credit cards that you're not using, just say, hey, I just got that. They're going to take them. They're going to take them if you don't use them. So use your credit wisely. Use your credit to buy things that you already have the money for. Use it to pay bills. I have a real estate, a realtor. He used to pay his rent on his credit cards, because it's going to be money, groceries, gas, pay your cell phone bill, pay your light bill, stuff that you're going to have the money for, pay it with that. So but you got to use your credit cards. Yes, they'll take it from you. If you don't know, they will take your credit from you if you do not use it. So use it and pay it back. Use it wisely, of course. I will never advise anyone to not use their credit wisely, but make sure that you do so. So like I said, if you got any questions, you can always DM me, contact me. I have my 10K card in my profile as well. But you can send me a message. You can say if you want to ask a question on the live, you can answer. I'll come back and answer it later. Like I said, once again, if you don't know me, I'm Toria Howard. I'm a realtor here in Memphis, Tennessee. Also a real estate investor with my company, Exquisite Dreams Properties. I'm a commercial loan broker. So if you're looking to invest in real estate, I can get you those funds as well. And also, if you need your credit repaired or you need to build credit, I can help you do that as well. So like, comment, share. I appreciate you guys for coming on. I really do. Share this information if you feel. Share my live. Share my video. Show me some currency a little bit. You know, share if you thought this was some good information. And I really appreciate it. And I see y'all at the top out here educating the people, educating the masses. Give me some love. Love y'all. Bye.